Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. If you're new to the page, go ahead, hit the like, subscribe, and the notification bell. And if you've already done that, please don't unsubscribe. Make sure that notification bell is checked because in times like these, you want to make sure you are up on everything. Hey, also too, this video, we are going to talk about at the end of this video. We're not going to talk about it. We're going to talk about it now for 10 seconds. Moo has a promotion for 15 free stock. It will be the top link below and deposit a minimum of $100. And we're going to go from there, right? Enough said. So listen, we want to talk about optimism in the market. Optimism in the market. And what I mean by that is every day there's something coming on, whether it be CNBC, Fox Business, Yahoo Finance, it doesn't matter, Wall Street Journal. One moment, to the moon, it's a bull run, we're over, we bottomed out, and in the next moment, there's caution. There's two short videos that I want you to watch. One is going to talk about stocks, the other is going to talk about crypto. Having said that, I shot what I'm calling a crypto summit myself, stocks with Josh, and we have two other younger guests, and we just talk about what is blockchain, how does it pertain to crypto, where do we see crypto at right now, what happened, and where it's headed. So that's going to be, I'm going to call it a crypto summit. At some point, you'll see a link in this bio and or you'll see a suggested video, in this corner of the video, okay? So I want you to listen to...
Of all time, perhaps.
Sorry about that, good people. Let's bag that up. I want you to listen to this first video and then we can go from there, right? Here we go.
Of all time, perhaps. And now everyone's trying to find the perfect data to suggest it's all over. And we need a few more months and more clarity on 24, let alone what's going to happen in the next few months here in 23.
Yeah, but it's rare, Chris, that you see all the signs in advance, right? That's why investors listen to people like you and to, other big name investors who come on the network because they're looking for the signs that they need to see before the obvious happens. And some would suggest that even just listening to everybody now is one of those signs. Why? Because everybody's so negative. And that's a counter trend sign to some. And if you look at the other, metrics that you can build a case around, why isn't now the time to start getting more positive?
Yeah, I do think one of the ways to kind of really think about it is look at the on the ground, economics that are occurring first and foremost, what companies are doing to protect margins. That's really important because the knee jerk reaction is we're slowing down. We're going to go into a recession, even if the recession's delayed. Consumers relatively healthy. The Fed is ultra tight right now. Money growth has just turned negative, which really nobody's talking about. We know inflation's coming down, but when you put all that together, your checklist of, okay, first, valuation falls. We had that. Maybe there's another shoe to drop on valuation, but there has to be new information that comes in that we don't know about to take valuation lower again. And what happens if rates come down sharper than expected at the back end, forces the front end's hand, then all of a sudden valuations don't look so bad. That's why we say stay balanced, don't be overly defensive, not overly on your front foot on risk assets. We do think there's more big buying opportunity coming, and that's when leading economic indicators do ultimately bottom.
So I believe that there's going to be plenty of buying opportunities. I don't believe we have bottomed out. And I'm going to say that while the markets are looking decent, while it looks like we're out of the woods. And so it's easy for me to be bullish when the markets look short-term bullish. And so what I'm saying in this is you could play the short-term bullish by doing some swing trades. But I would still, me personally, anything I say is not suggested for you to buy, hold, or sell. But me personally, I'm still mostly cash. And I'm quite confident with that. I don't care about how things run up. Somebody commented on my page yesterday. It was funny, though. He said, here's Larry at when Tesla is 1,000. I believe it's going under 100. So that was pretty funny. But I get your point. Because it's running up right now in the micro. All right, it's running up right now because there's a lot of short-term good news, right? But there's long-term news. We still have the Fed who is, doing his job, which is causing unemployment, causing inflation to come down. And there is signs, this is good, that inflation is coming down. So everybody think that we are out of the woods because inflation is coming down. My biggest fear right now, to be honest, is Q1 earnings of the big major companies, right? And so we're going to have to wait until April to get those numbers. That's my biggest fear. Let me know what yours is. That will be a market mover. And then again, the Fed. If we show any sign that inflation is start to peak back up, then the Fed is going to be sharpening his knife, and he's going to be not good with, he's going to be hawkish, right? And that's going to just tank the market. But having said that, I'm going to continue to say all of the companies you believe in right now, you should be dollar cost averaging if you believe in them. I'm still dollar cost averaging in 21 different, I think it's like 20 different companies that I'm dollar cost averaging in, Tesla being one of them. I never stopped from January of last year. And so very small amounts, $5, $10 a day. And you do what suits you. So even if Tesla is at its bottom right now or has bottomed out, and companies like that, Apple, Microsoft, Google, if they have bottomed out, then I'm still good because I have been $5 a day in. So I just have not the big chunks of money in it, but I still can ride the wave up. So that's the way you hedge yourself against missing the bottom, DCA. All right, so now let's go to crypto and we'll go from there.
And it has been a good year so far for Bitcoin. As far as the reasons why it may not last, there's a litany of reasons that Wall Street has talked about this week. The first one is that some of the buying has really been fueled by existing crypto investors. So you can track money moving into Bitcoin, and for the large part, it's been moving from what they call stable coins, or the equivalent of cash, these dollar-based cryptocurrencies. You've seen that money move into Bitcoin. It's seen as sort of recycled crypto. What you really want to see for any sort of breakout in prices would be new investor interest, which really has not returned to these markets. Bernstein put out a note this week describing it as a mean reversion rally, as they put it, technically meaning that it's just returning to the historical averages for prices. They say that they're cautious to bearish at this point. Katie Stockton earlier this morning, a technical analyst, said she was pretty skeptical that this was sustainable. Yes, Bitcoin broke through its 200-day moving average. It's happened before. She said it often proves to be a false signal. She's not convinced. And then others have really pointed to last year's performance. Bitcoin was down about 65% in 2022. If you look at some of the investors here, they may be looking to lock in profits, and that could motivate some selling. So a lot of skepticism that this is a long-term rally.
So there you have it. There's no new people really piling into crypto. It's just that crypto has been, people are selling altcoins and going into the more stable coins. And as you see, a lot of people are pretty much flat that got Bitcoin around 19K. And it's not necessarily what you think all of the times, but it's the data. So we have to trust the data. And the data is showing me that I'm optimistically cautious. And so I'm not going in with everything with crypto. And so, again, we're in the accumulation stage, or phase. Then what's the safest thing to do is simply accumulate and continue to dollar cost average. You may say, hey, I don't want a dollar cost average. Then you need to check your emotions. And like Keenan always says, trade with the charts, not your heart. And he's absolutely correct. So we have to trust the data, good people. So I'm just exercising some caution. Remember, you do what's best for you, all right? Hey guys, make sure you check out the link below. Download Moomoo. That's going to be the top link, and get up to 15 free stock depending on your deposit amount, right? Hopefully you learned something. I want to thank you guys for being a part of this family known as the Stock Up family. Thank you for continue sharing my page as we continue to grow. And I want to make sure that our pocketbooks, our bank accounts, and most importantly, our trading accounts continue to grow. I'm going to do everything I can to help you guys with that. Live, love, laugh, learn, and earn. We'll see you later.